Woo, back at it again here, guys. What's up? Here with another one to talk about Brookfield Corp. Nice investment I have on my radar here. It's a global alternative asset management company. If you haven't heard of them before, the likes of think about Berkshire Hathaway when you're looking at this company. They have a pretty big portfolio of commercial properties. More catered here, almost all entirely towards the real estate. Investing in, multiple, as we'll get into it later, renewable power facilities. They own operating businesses. They have wealth solutions like with credit and insurance and annuities and all that. So, the company kind of has a lot going on here, and we'll cover this all in the next couple of slides. So here's a pretty cool chart. Pull out the little laser pointer here just to kind of show you, the companies compare favorably against the S&P 500. We're talking here Brookfield, Amazon, Louis Vuitton, Moët Hennessy, Berkshire, Walmart, and the S&P 500. So on a 30-year average, you can see the S&P 500 has been returning 11%, 8% over 25 years, and 11% over the 20 years for a total of 19, just about 2,000% here. Um, you know, Brookfield has been very much so living up to every single guidance they give year after year, which you'll see in the next slide too. But an 18% return over 30 years, 19% return over 25 years, 16% return over 20 years. 30-year cumulative winds up being almost 13 times the size of the return of the S&P 500. I mean, what they're doing is pretty sensational here. So if there's one thing Brookfield does is that they deliver on their promises and on guidance. Here's just a cool graph, them setting their target 5 years ago with a goal of more than doubling their business, and they more than exceeded. 2 billion to 4.8 billion, $48 to over 100. It's over a double. Every single time they have given guidance, they have beaten it, which is very rare in this market and something you like to see in management. So when you see the guidance they're about to give on the next slide, I would take it very seriously, and it looks like an attractive investment to me based on their historical track record. It's how you evaluate a CEO. So here's how Brookfield is planning to grow. This is their three-pronged approach, three pillars here. One, the AI innovation is driving massive needs for infrastructure. Two, there's an aging population which are driving demand for new wealth products. And three, the global real estate recovery being here. As many as you probably know, people are anticipating the Fed, to drop interest rates here. Just to show you some of the opportunity Brookfield is looking at, they are expecting 7 trillion here in capex spend over the next 10 years. Through AI factories, computer infrastructure, power and transmission. They're well positioned to capture a large market share here of the 7 trillion. Yeah, so it's kind of just cool to look at how the engine fuels itself. You have here Brookfield Corporation, which, it all runs through the insurance organization in the sense that the insurance organization is able to get the capital from Brookfield and is able to get the float from Brookfield Wealth Solutions, and then they're able to take that money and cycle it into investments in Brookfield Asset Management. Unlike a lot of other people like Zillow or like Open Door who have cut back from actually buying houses, Brookfield here has done the opposite. They've actually deployed 60 billion in capital over the past 5 years, which kind of gives them way more attractive cost basis for when items start to appreciate and rents start to rise from a perspective of real estate. So to conclude, no DCF, no comparable company approach. It's an investment management company who has continually delivered on their promises and on guidance. Here it is in from their mouth, Q2 2025 earnings report. With our business philosophy in place, we expect to deliver planned value per share growth of 16% on an annualized basis with a price of $210 by 2030.